Hey guys, Mubarak here of Penny Stock. Hope you're doing well. In this video, I want to talk about what is all the rage right now on the street, which is Tesla. Okay? Tesla has had the most insane run over the last few weeks, and I'm here to explain to traders why it happened, how it works, and how that type of pattern happens all day long in the penny stock markets. Okay? Because it's very important to understand what happened there in order for you to develop as a trader. All right, so for those of you who don't know, Tesla obviously is that electric car maker by Elon Musk. Been around for, I would say, roughly late 2010, maybe it IPO'd around 2013. But I'm going to make a graph here that kind of shows how it's traded, okay? So let's assume, again, I don't have it in front of me, but just saying I'm going to make it roughly here, 2018, right? Or honestly, I could even make it 2019, right? I could make it till right about December 2019. I think it triggered off somewhere here at the $200 range, and in 2019 it got up to $400 or something, right? And at this point, when I was looking at it, when my friends would talk about it, I would think, and it kind of was steady, maybe some market dips, but if you look at the overall kind of pattern, just a nice small traditional progression upwards, okay? Made its way up. Now, for some reason, what happened in December 2019, and then let's make this January 20, and again, for those people who are mathematic freaks, please don't mind my incorrect spacing of the axes. But what happened from here within 1 month, okay, this is December 2019, this is January 2020, it shot from $400 all the way up to $800 all of a sudden. And nothing crazy happened. There was no crazy new announcements. There was two things, right? And this is what we call fundamental analysis, right? Two catalysts that happened. One, so this is the technical, right? When you're looking at the graph, when you're observing the charts, that's the technical analysis part. That's all fine and dandy. We're seeing that there's some crazy technical breakouts. It's supernova, it's going up, okay? So that's the technical part. Now the fundamental part, there's two factors. There was one that Elon Musk invested some of his own capital in, okay? So that's always good, right? The CEO is backing his company, and unlike Jeff Bezos, who just sold $2 billion of Amazon stock in the last 2 days. Now, of course, Amazon's just going to do better and better, but that's beside the point. So one, Elon Musk funded his own company, which is a sign of good faith. And two, was positive earnings, right? Finally, for the first time in a decade or something, Tesla looks like I don't know if it made a profit. I think it just didn't lose as much money. So, ridiculous world we live in, but that's good news. And so those are the two fundamental catalysts that helped this stock price. But it wasn't anything to do here that actually caused Tesla to go up. All right, let me explain what happened with Tesla and why this happens in penny stocks and how you can actually profit off of it anytime it happens, right? This happens to at least one penny stock a day. So what happened is that for some reason Tesla is a very highly shorted company, which means that there's a lot of traders out in the market that are benefiting from putting short positions against this stock. That means they're betting that the stock price is going to fail. Right? They think that the price is overvalued. They think Elon Musk is crazy. They think that the tactics and the lack of profits are going to cause the company to eventually collapse. So their whole dream is that Tesla crashes and it goes down. Okay? So, however, what happens is when a stock price starts going up for whatever random reason, when you're somebody who's shorted, right, what happens is it's the opposite of the normal mentality of going long. Right, because first when you're going long, you buy first and then you sell. When you short, you're actually doing something a little different. All right, you're actually selling the stock first at a loan. Right, so basically you tell the broker, listen, I want to short. I believe that the stock is going to go down, and so what I'm going to do is I'm going to use you guys, the broker, so TD Ameritrade, E-Trade, whatever. I'm going to use you guys to be able to first sell a stock. And then what I believe is that the price is going to go down. And so then later on, when the price is lower, I will buy the stock back at a lower price. And that difference in what I sold it at first and then what I buy it back to cover later, it's called a cover, will be my profit. Right? So the people who are shorting Tesla at $400 believe that is way overvalued right here at 400. And they believe that the stock price is going to go down. So they've sold a bunch of $400 Tesla, and they're assuming that at $300, it's going to be able to be something that makes them a profit, and it's going to go down. Well, the problem with that, and the problem that happens all day long in this market, is something called a short squeeze. Okay, that's a very important terminology you need to understand, because if you want to get into day trading or successful trading in any fashion, you're going to see it all day, which is a short squeeze. So let's go back to the scenario. Tesla's at $400. There's a ton of short traders. And I'm talking about, not talking about retail traders. I'm talking about billions of dollars of hedge fund money against Elon Musk because they think it's overvalued. They think it's going to collapse. So what starts happening though is that once the stock price starts going up, people get a little scared because now they're losing money. So just in the same way that people like you and I, when we're going long, if the stock price starts to dip, we automatically want out. We're just like, let me cover my losses, let me cut my losses, and let me sell right away. Right? So short sellers think the same way, but what's happening is you have to remember the second part of their trade. When they want to get out of their position, they need to buy. And what happens when they buy? The stock price will go up. And that's what's called a short squeeze, because what's happening is that there's a ton of short people, not short people, but short people who are trading short. They're all lined up here and they're all hoping the stock to go down. And they get scared when the stock price goes up because they're going more and more in the red. They now have a larger and larger deficit. And so they close out their positions, but it triggers a ton of buy sales. And that triggers the stock to go up. And it's just a vicious chain reaction, because as the stock price keeps going more up, more short traders get scared. They cover by buying, and that triggers the price up again. And then it triggers more people. And it's just a cycle and cycle. And that's how, in the span of just a few weeks, Tesla went from $400 to $800 for no damn reason. Okay? But the significance of that is, I personally don't care. I mean, I wish I was able to make this money, but I thought Tesla was overvalued even at $400. Not that I'm going short, because I know Elon Musk is a genius, but this is not investment advice. This is, again, educational. So the short squeeze is super important, because that's why you need to understand the different variations of the market. So if you're looking at a stock, you don't have to only think about, the technical and fundamental analysis and chart patterns that we preach. You also have to keep in mind the psychology of the people who are holding the stock. Because this short squeezes type of games happen all the time. And the crazy thing is that for people who do trade short, this is something very scary, because what a typical, if you thought you were smart and you were a hotshot trader, and if you didn't understand the psychology of the market, you would say, oh, Tesla's $400, $500, $600. This is ridiculous, right? It's obviously overvalued. It's going to crash. And you would try to buy in here or short there, and you would also feel the effects of the short squeeze, because you would be like, why is the stock price going up? There's no news. There's no technical indicators. There's nothing. And what is it? It's simply the cycle that's created by the short squeeze. Okay, so that's very important to know. It's kind of a more advanced tactic, but I would recommend rewatching this video, because it's, as soon as you understand this concept, it took me a while to get. The second you start understanding this concept, you'll have a much better understanding of the stock market as a whole. Okay? So I hope you guys enjoyed this video. As always, if you have any questions, feel free to reach out to me or my team at admin, that's ADMIN, at inpennystock.com. And finally, I'm always looking for different content ideas, different videos that'll help you guys. So please feel free to leave a comment below or reach out to us. Let us know what content we can make for you. Hope you guys enjoyed. Take care.